Forex trading entries are one of the most important part of trading. So once you get them wrong, they will make your trading journey difficult. So in order for you to master them correctly, keep watching this video, guys, for you to gain more knowledge on how to enter trades, how to get those perfect entries. Because I've experienced, since I started trading, I've experienced those kind of things where you enter the market and then after just few minutes or few seconds, you are already taken out. The market already hit your stop loss. Because I didn't know where to enter and where to exit. So now keep watching the video for you to gain more knowledge on how to enter trades using smart money concept or supply and demand. So my strategy is based on supply and demand and plus smart money concept. So as you can see here, we are on gold and we are in an uptrend. As you can see, we are in an uptrend on H4. As you can see on H4, we had a break of structure. One thing you must know is that when you are trading, when you are if you are analyzing the market and you are looking to enter a market or a certain pace or gold or indices, one thing you must know is that there must be a break of structure. As you can see here on the market, here on the charts, price had a break of structure, as you can see here. So here is the break of structure, meaning that we are breaking structure on the upside. So meaning we are bullish. So now which areas now? The second thing, the first thing is there must be a break of structure, and the second thing is draw your zones. Where to draw your zones? Where should you draw your zones at? Especially now we are in an uptrend. So here is my zone, my first demand zone is here. And the second demand zone is here at this order block, which is here. So the second one is what we call a major demand zone. This one is a minor demand zone. So now we are expecting price to do what? We are expecting price to reverse from these two zones that we draw here. Either price can just come straight and reverse at this zone. We look for what? You look for candlestick pattern at this candlestick pattern. There must be a bullish engulfing, inside bar, a bullish hammer, and or if you want to go enter on a lower time frame, guys, if you want to go enter on a lower time frame, you just wait for a change of character here. You wait for a change of character. This is the change of character here. And once the change of character happens, you wait for price to come back. You wait for price to come back. Okay, price to come back. You draw a zone here on a lower time frame. You wait for price to come back. So there are two entries that you can make. There is this one, which is aggressive entry. Aggressive entry, where you can just enter aggressively when you see a bullish engulfing or a bullish hammer or inside bar here, then you enter once the candle closes. Or there is this other one where you wait for a change of character and you wait for price to come back and you enter here on a lower time frame. Let me say on M15, for you to have a high risk reward ratio, guys, a high risk reward ratio. For you to have a high risk reward ratio, like in smart money, using a smart money concept trading strategy, we normally have a tight stop loss and a higher reward, guys. A tight stop loss and a higher reward. So they on the second of if price doesn't respect these two this first zone, if price doesn't respect the first zone, and then we wait for price to come back, for price to break. If it breaks this first one, you wait for what? For price to come to the second zone, and you wait for a change of character, and then you wait for price to come back, and then you enter. This is a change of character, guys. This is break of structure. Break of structure here, and then you enter. So yeah, now looking at this, we also have inducement. This is the first inducement, and this is where you can enter. You can enter here, guys. You can enter here. Aggressively, you target this higher. As you know, in the uptrend, the higher always goes. The higher always goes. So you put your SL, your stop loss, just below this, slightly below this zone, this low here. Or you can enter conservatively. You wait for price to change of character, and then you just enter on the first pullback on a lower time frame. You target this higher here. Yes, you see the difference. Here the stop loss is tight. Here the stop loss is large. See the difference there, guys. See the difference. So now let's go to the real price now, to the charts now. To the price, to the chart, because we were just looking in theory. Now we have to look at the price itself. So okay, now the first thing is draw your zones where you know those stronger zones that you know price will reverse from. So I have two. Here are my two zones. Here are my two zones. As for now, I will just in a downtrend, in a lower time frame. In a lower time frame, guys, this is a downtrend. Because it's just a pullback. It's just a pullback. This one is just a pullback, guys. But on a lower time frame, let me say like H1, 30 minutes, M15, M5, M1 is a downtrend. So you wait for what? You wait for price to come. You wait for price to come. I'm just patiently waiting for price to come. As you can see, Okay, there is the first rejection. There is a first rejection, guys. Now let's go to the lower time frames. Let me say H1. So my lower time frames are H1, M30 or M15. As I said, this will be a downtrend. It is just a pullback, guys. It is just a pullback. We are in a pullback phase, guys, as you can see here. See, as you can see, price is making lower lows and lower highs. Lower lows and lower highs. Lower lows and lower highs. Lower lows and lower lows. So we are breaking structure to the downside. So now as you can see, now I'm looking for price now to break where? To break this. Once price break that lower higher, then we have a change of character. Then we have a change of character, guys. Now we are waiting for a change of character. There is the change of character, which is called a choke. If you shorten it, it is a choke. Change of character. So now let's play price again. There is a change of character, guys. There is a change of character, as you can see, guys. As you can see, there is a change of character. Now we have a change of character, guys. So now let me draw another zone. So this one is on H1. Let me draw another zone. So this is the second zone. So now if I to enter on H1, I could just enter here aggressively, bruh. I can just enter here. Enter here, put my stop loss where? Here. And target where? Target at this high, guys. At this high, guys. At this high. So this is 1 to 4. Almost 1 to 5. But this is aggressively. If I want to enter, if I want a confirmation now, I want to have a confirmation just to enter on a lower time frame to have a tight stop loss. To have a tight stop loss. For me, I would just wait for price to come back where? Price to come back at this zone. And I'll put my stop loss somewhere there below here. Just here. And I will target the same level. As you can see, but the risk reward ratio is different. Why? Because stop loss here is not tight, it's wide. Here is tight because we waited for a confirmation, guys. So let's play price again. Let's play price. So as you can see, okay, guys. So this one should have been an entry here. Okay, I should have entered somewhere here. And my stop loss somewhere here. So let me just quickly let me just quickly go back. Let me just quickly go back. Okay, let me just quickly go back. Okay, change of character. there is a change of character, and this is the pullback, guys. This is the pullback. So you would have entered here. You would have entered here on the pullback. So this was just inducement. This was just inducement. So this was just inducement. So this one, you would have waited for price to break this low, then you enter a buy here. As you can see, guys, as you can see here. So this stop loss is much more tighter than this one, as you can see. So now we have a break of structure there. There is a break of structure. There is a break of structure, guys, as you can see. So now we go back to the H4. We go back to the H4, as you can see. And then okay. Let's wait until if your price will go back up at this TP there. So as you can see now, there, okay, you see now, we have a break of structure. Now, if you would have entered, if you want to enter again, if you wanted to enter again, you draw a zone here, a zone here, a demand zone here, and then you can take another entry here. Where? Just here. Another entry here. You put your stop loss where? Just below this low here. You see how tight it is, and then you target this high here. You see, it's a 1 2. It's a 1 to 4. It's a 1 to 4, as you can see here. So we would have gotten 3 entries here, as you can see here on the charts. Let me wait if we are in a trade, and then let's just wait and see what will happen. We are almost taken out by this. So see, TP smashed, guys, TP smashed, guys, TP smashed. We would have gotten 3 entries here. The other one, the aggressive ones, after price tapped into where? After price tapped into this demand zone, which is here, we would have ended after this candle closer. And then another entry would have been where? Another entry would have been here, guys. As you can see, this was our pullback. When price come back to swipe liquidity below this way, below this zone, there is liquidity here. Price grabbed liquidity here, and then from there we took a second buy. We took a second buy, guys. This is our second buy, and then after tapping here, grabbing liquidity, and then we shoot back up. We break structure now. After breaking structure, we came back, and then we draw a demand zone here. Price come back, tap in this area, and then we bought. That our third buy, guys. That was our third buy. Now we have a break of structure where here. There is our second break of structure, guys. There is our second break of structure. Guys, subscribe to the channel, like the video, share the video, comment down below if you have any question that you don't understand. If you want me to do another video on a certain on a certain topic, guys, just comment down below on which video should we discuss. What should we discuss in the next video, guys? You can drop comments down below. Share the video, guys. I don't sell any courses. I don't sell signals. I don't do mentorship, guys. There's a free Telegram group. I will drop it in the video description. You join for free. You don't have to pay anything. I don't sell anything, as I said in the beginning, guys. So now here again, let's look at US dollar JPY. This is one of the currency pairs that I trade. As you can see here, guys, already, I already put this one already. So this one is a downtrend. Price is making conservative lower low, lower highs and lower lows. Lower high, lower low, lower high, lower low, and lower high, lower low. So now price now is in the middle now. Price is in the middle of a lower high and a lower low. So now what now? So if now, okay, if price comes and break this high, this previous high, this strong high, then it's a confirmed choke. It's a confirmed change of character. This one is on a higher time frame now, on H4 now, as you can see, on H4. You can do this same thing. You can do the same strategy. This my entry strategy that I do on higher time frame. You can do this on a lower time frame, on M1, M5, M15, M30, 1H, yeah, and stuff like that. So we are now waiting now. Let's play price now. As you can see now, if the price doesn't break this low, then it means that we change now. There is a change of character, guys. There is a change of character, obviously. So you draw what you put. So instead of price respecting this previous lower high, price broke it. Now what does it mean? It means that we have a change of character. We have a change of character. We have a change of character here now. So now what do we do? Okay, we now draw away. We draw two zones. We draw one zones. I will draw a zone here. I will draw a zone here. Here is the zone, guys. Here is the zone. Here is my order block or demand zone. So now what do I do now? What do I do? I will just be patient and wait for price. I will wait for price just to play out. That is our first inducement. Now what do I do now? This one, it shows that we have our equal lows here. Equal lows, it means there is liquidity below these equal lows. There is liquidity below these equal lows here. There is liquidity below this. Price now came to grab this liquidity, which is here at equal lows. This equal lows, there is liquidity. So price will come below this equal low because there is too much liquidity here. And there is an imbalance also here. So price will come and fill this way, fill this imbalance here. And then what? And then price will buy. So where now should we look at now? So I'm just looking at here. Price will come and fill this imbalance here, and then we buy after price coming here. We wait for candlestick formation here. So now let's play. Let's play quickly. What? See now, prices reject this demand zone. What do we see? We see a bullish hammer. After a bullish hammer, we do what? After this candlestick opens, we do what? We put a buy here. After this candle closes, we put our stop loss where? Where do we put our stop loss? We put our stop loss just below this area here. And then we target where? We target, we put a 1 to 4. 1 to 4, guys. That is a 1 to 4 that we put up there. Now what should we do? We just watch price. We just watch price. So long as you put a stop loss there, you don't worry. You just watch price. If you could check, this one is a change of character on a lower time frame. It's a change of character on a lower time frame because price was in a downtrend on a pullback. It was on a downtrend on a pullback on H1 or 30 minutes or 15 minutes or 1 minute or 5 minutes. It's a downtrend. So we have now a change of character at a lower time frame, which is lower time frame, and then you can also enter after this pullback on a lower time frame. So for me, I only focus on higher time frames, H1 or H4 daily, but I enter on H1 and I only enter on H1 or H4. Break of structure, where? Break of structure here. This is a break of structure, guys. Break of structure. BOS. BOS. And what do? We come here and we draw another zone for our second entry. Now, where will be our second entry? Our second entry will be either at this supply zone here, stop loss slightly below this zone, and then we go further, we get a 1 to 2, 1 to 3, a 1 to 3 risk reward ratio, guys. If price doesn't come here, then it's okay. We don't worry about that one. So we just watch price doing its things. We watch the market, what the market is doing. We are triggered in the trade. We are in the trade, guys, as you can see. And you see, as you can see, guys, we are in a trade, guys. We are in a trade. We are in a trade, guys. So here, there was only one zone which we should look at. You see, our stop loss is, our TP has been hit. As you can see, guys, simple as that, guys. It's very simple. So like the video, guys, share the video, comment down below on what to discuss next. Yeah, share the video, join our free telegram in the video description, guys. Bye, guys.